Good afternoon and warm welcome to all members of the Radley community and to our school partners who have joined us today on Zoom. My name is Caroline Monaghan and I'm responsible for our Beyond Radley Career Speaker Programme, a series of talks designed to give you a live insight into the world of work. Today, the focus of our panel discussion is the world of finance. With so many different careers you can move into, it can be a little daunting to work out where to start. To help you navigate this complicated arena, we've lined up our panel of 4 financial professionals from the Radley community to tell you about how their careers developed and what they've learned along the way. I'm also pleased to have a co-host working alongside me today, Hilton Harvey, 6'1", who co-founded the Investment Society at Radley, and he's going to introduce our speakers and ask some of the questions. I'll hand you over to Hilton shortly, but before we begin, a quick reminder of a few things. Please keep yourselves on mute throughout. If you have a question that you wish to ask during the talk, then please put it on the chat and we will have a Q&A session at the end that Hilton and I will compare. Also, I should let you know that the event will be recorded so that other people can learn from it afterwards. So without further ado, I'd like to hand you over to Hilton, who will introduce our speakers.
Thank you. I am pleased to be able to introduce our very experienced panel of experts, which includes Anthony Cassidy, a hedge fund expert who now trains graduates who have joined investment banks. Stephen Bamford, who is dialing in from San Francisco and specializes in the area of private equity. Will Maiden, our asset management expert, and Nick Woolford, our corporate development expert. Welcome, gentlemen. It's great to have you here today. I'm going to kick off by asking you each in turn to tell us about your career path to date and a little bit of what it's like in your financial area. Starting with you, Anthony.
Thanks, Hilton. Good afternoon, everybody. So how did I get through my financial journey? I did a finance degree, and during that degree, I had the opportunity to take a year out and worked in equity research. So I looked at companies and we were analyzing companies. So it was a little bit of accounting and a little bit of balance sheet work. So I did the year out during my university, came back to university. I was in London at Cass Business School. And then after that, worked for Barclays on a trading floor, and then I know Stephen is in San Francisco now. After the trading floor, I went to another bank called UBS, worked on another trading floor, and then a client of mine asked would I like to go and work in San Francisco with them. So that wasn't a very long conversation. So I ended up in San Francisco where we looked after a fund that had European investments in it. So I got up very early in the morning and finished work at about noon. Again, that might be something that Stephen can has experienced. San Francisco for 4 or 5 years, back to the UK where I did a master's degree, and then finally to a hedge fund, the second hedge fund I've been working for in London, where I headed up the trading desk for a hedge fund, which was a great experience, buying and selling equities, buying and selling bonds, buying and selling currencies, commodities, all sorts of things. So I ended that just after the financial crisis in about 2011. And then I began training people who were looking to go into finance. So this would be interns, midway through their university degree, and then graduates. So I get involved in a lot of the big banks graduate programs. So we see 100, 200 people at the moment in virtual rooms, of course, coming in, and we give them a 2 or 3 week grounding in finance, and really give them a chance to be able to hit the desk running. So yeah, I've had a lovely time in a number of different locations, a number of different roles, a number of different firms. And I guess, Hilton, that would be it for now.
Thank you, Anthony. Now over to you, Stephen.
Oops, just figuring out Zoom after a year of lockdown because of COVID, but nice to be reconnected with everybody at the Radley community, and thank you for hosting this. So I think I was saying to the group of panelists a minute ago, I think I was one of the first people to leave Radley and go to university in the US, and through that experience ended up doing an internship at Goldman in my sort of penultimate year at college, and got involved in a group called the Alternative Investments Group. At the time, I had actually no idea what an alternative investment was. I remember one of my interview questions was actually what's more liquid, public equity or private equity, and being totally stumped. For those that don't know, public equity is definitely more liquid than private equity. But was given a job after that full-time at Goldman. So I joined in 2001, actually in London, just after the last tech bubble, and through a sort of series of eventualities, my boss left shortly after I joined. And so I was given an opportunity to build out our alternative investments sort of platform in Europe. And what do I mean by that? That the business I was involved with was really responsible for structuring and syndicating, distributing, selling private equity funds, hedge funds, real estate funds, special situations, credit opportunities, Goldman Sachs balance sheet deals, predominantly to very, very wealthy, high net worth investors in Europe and Asia. So I ran that business for the better part of 8 or 9 years, moved with Goldman to Hong Kong, and then got hired by TPG to build out our investor network in Asia. At the time, TPG had some challenges with its business in Asia. So my role more from sort of fundraising and developing relationships with investors to also restructuring, hiring, rebuilding our Asia investment business. We acquired a secondaries platform in Asia. And so on the back of all that, was asked to move to San Francisco. So I moved to San Francisco now, I think two or three years ago, and have been responsible for running and managing, building out TPG's fundraising sort of capabilities and people, our team globally. And then on the side, when I have some spare time, I also advise a company that's trying to change the sort of delivery systems for CRISPR, the gene editing technology, and then also for a small venture fund called Jazz that invests into early stage technologies around the human cognitive and musculoskeletal space. So that's kind of how I got to where I got to sort of a little bit of a winding path that's taken me from London to Hong Kong to San Francisco.
Thank you, Stephen. Now over to you, Will.
Thank you, Hilton, and thank you everyone for sparing your time to dial in. I am sitting not far down the road. Unlike Stephen, I'm in our office in Oxford. I was at Radley 1986 to 1991, so 47 years old. I, like one of the other people on this panel, Nick Wolford, went to Newcastle University where I read economics, and maybe I could give you one piece of advice. The mistake I made is I never took a proper look at what the content of the degree was before I signed up to it, which was an incredibly dry course. And one of the things, having been pretty bone idle as a result at university, I worked out that I wasn't going to get a particularly good degree. So the one thing I made damn sure of was that I had a job, unconditional offer, before my degree result came in. And my first proper job, having done work experience as a teenager at Cazenove Capital in London, was to work for a partnership based in the northeast of England called Wise Speak, which was a private wealth management firm similar to the structure of Cazenove. I spent about 10 years there and got a hell of a good grounding. And one of the things, many things that I learned whilst I worked there was how damn difficult it is to run money very successfully. And the data draws this out of the asset managers that exist in this world. Only about 10% over the long term, actually somewhere between 5 and 10% actually managed to outperform the index, which would suggest that 90% of the marketplace is not very good value for money. That was one of the many reasons why I decided to stop doing what I was doing. And I knew a chap called Will Campion, who's actually just sitting across the desk from me, who was the founder of Campion Capital, and maybe known to some of you as he's had a couple of boys through Radley. Ben Campion, his youngest son, is currently at Radley. And the premise behind Campion Capital, I mean, it couldn't be much further from the world of Why Speak, which ended up, when I left, was owned by Brewin Dolphin, which is a listed company in the UK with, at that stage, had about 1,500 staff. When I joined Campion Capital, the business was about 2.5 years old, and I was the fourth person through the door. And rather like Stephen, my role and Campion Capital's role is we carry out what's called distribution for asset managers. Now, what that means is we are in charge of raising capital for investment funds. So that's a commonality with the role I play with Stephen. Where we're very different to Stephen is Stephen operates in the private equity arena. We almost exclusively operate in the public market. So stock markets where asset managers are investing in public companies, whether they be a Vodafone or a Shell in the UK, or an Amazon or a Google in the US. So we're capital raisers. Our job is twofold, really. One is to go and find funds that we want to raise capital for. That's in many ways the hardest part of our job, because back to the 90-10 statistic, we're trying to identify the 10% that are good value for money and going to do a good job for our clients. And finally, to wrap up, on the other side of the coin, our clients are not, unlike my old job, are not private individuals, no matter how wealthy they may be. They're institutions, so they're pension funds. It could be BT Pension Fund, it could be the Norwegian Sovereign Wealth Fund, it could be Harvard University Endowment, and our client base is pretty global. We have 12 staff today, 2 of whom sit in the US, 10 in the UK. That's enough from me.
Thank you, Will. Now, finally, over to you, Nick.
Thanks, Hilton. I was at Radley a year after Will, or rather, I was a year behind Will, and therefore I've known him a long time. And peculiarly enough, I spent the first probably 6 or 7 years of my career sitting next to the man he's now sitting opposite, Will Campion, who's just mentioned. I started life in my financial career at what was then called Robert Fleming, which was a small UK-based and in fact family-owned investment bank. I got into that role largely because I worked there in a number of holidays as an intern. I worked on the desk that Will Campion used to run with a friend of his, and ultimately that business became JP Morgan in the UK through acquisition. We traded equity derivatives on behalf of clients in the UK and in Europe, quite similar to part of Cass's early career, in fact, Anthony's early career. Will then left, and I ended up running that desk for about a year before I learned one quick thing in my career, which is that if you don't want to be your boss, i.e. the person you're working for, you don't want their job, and you don't necessarily think you're learning anything from your boss, it's probably time to move on. So I went to go and do an MBA in Sydney, was there for a year and a half, and then I came back to the UK and started working at RBS, moved to Edinburgh, and worked at RBS from 2005 through the acquisition of ABN AMRO and the financial crisis that then coincided with that, and then worked there for probably about another 5 or 6 years afterwards, working in the strategy team, trying to work out effectively how to put RBS back together again. I spent a long time in the investment banking business, trying to work out what it was that we'd actually got on our balance sheet as a consequence of the financial crisis, and then what to do about it. I spent some time working on the strategy for Coutts, which is the the wealth management business that RBS owns. And then ultimately I ended up running the strategy team for the personal bank, the retail bank, for personal and business customers. And along the way, also sold or was involved in the sale of 3 pretty big businesses as a consequence of the financial crisis. So we sold a fund management business to Aberdeen Asset Management, sold an enormous aviation business, which owned lots of aircraft, to a Chinese bank. And we also sold the commodities business that RBS used to own to a company called Sempra in the US. And then in 2016, I moved to what was then a pretty small regional bank called Clydesdale and Yorkshire Bank. It had been owned by an Australian bank, but they IPO'd it, and therefore it was its own animal, if you like, again in the UK. And they asked me to go and set up a strategy and corporate finance team there, which I did in middle of 2016. And I've been there ever since. I work in, as I said, the strategy and corporate finance area, mainly strategy these days. I bought, with the rest of the team, obviously, Virgin Money in 2018, which created the 6th biggest bank in the UK. So ironically, I was involved in a transaction which was the last big transaction in UK banking, which was ABN AMRO, which nearly broke RBS, and then was involved in the first one after the financial crisis, which was the Virgin Money transaction. My job is, effectively what I do as my job is I try and work out what the future direction of the company should be and advise the leadership team and the board on that. The most simple way to describe my job is that I ask the annoying questions that no one really knows the answer to, and then I try and help answer them. That doesn't mean that I know the answers by any means, but try and work out what the big moving parts are, which markets should we participate in, which product lines should we be in or out of, which geographies might we want to be in, and do that on behalf of the sort of various stakeholders in the business, the shareholders, the employees, customers, regulators, etc. So that's my career in a quick whistle-stop tour, Hilton. Back to you.
Thank you, gentlemen. That was really fascinating. Just a reminder to everyone on the call, please do pop your questions in the chat. This is a really good chance to grill our experts, and it'd be good if you could direct them towards one of our experts individually. To kick off the questions, I'll ask to Anthony, what do you have to do to get into a finance career right now?
Ooh, right. I mean, I guess, listening to everybody else talk, I guess, the first thing that comes across is how many different paths there are, how many different journeys within finance. Finance is such a big word. There are so many different types of roles, so many different types of institutions. You've got Nick at a, what do you call it, a retail type bank. You've got Will at an asset manager. You've got Stephen at a private equity fund, another sort of type of manager of assets. The people that I see coming through on the big banks graduate programs. Now, again, you do not have to start your career in finance on the Morgan Stanley graduate program, on the Goldman Sachs graduate program. Okay, there are many different ways that you can get in. But of the people that I see, and there's a very good mix of male and female coming through. Many different roles that they'll be following, but a lot of them have, during their university time, they've tried to get a job on a bank's spring week. So a lot of the investment banks run spring weeks. Normally, sometime in the Easter holiday, the Easter break when you're at university, and you can get 1 week of experience within a big bank. Maybe you're sitting you're probably not going to be on the trading floor at that point, because there are various regulations about who they can let in and who they can't. But you're going to be sitting with someone who'll give you a little bit of guidance about what their role is within the big machinery of the bank. Now that's spring week. That's a week in the first year of your university degree. Second year of your university degree, if you can get onto a bank's intern program, and that's normally a 2-month program. And you might get some rotations around different desk areas. So you might be sitting in commodity trading. Okay, so looking at what's happening in gold, what's happening in oil, what's happening in copper. And then you might be sitting within the bank's treasury department. And that's a little bit like what Nick's doing now, wondering, wow, how is this organization? How do we just fund ourselves every day? And what are we doing with our money? And who's got our money? And when am I getting it back? So those intern programs, to me, are gold dust, okay? Because in effect, it's a 2-month interview process. By the time you come to want to be making job applications for full-time graduate work, they take 80% of the graduates from the spring week. So the more experience that you can get before you make a sort of a graduate application, the better. And to me, sorry to go on a little bit, you can do those spring weeks, you can do those intern programs. You don't have to then go and do a career in finance. Okay, certainly on the intern program, you will be paid a very nice salary for 2 months work. And at the end of that, you may decide, you know what, finance, it's just not for me. But you've got very nice name on your CV and something that you can use to market yourself for whichever direction you want to go after that. So to me, Hilton, trying to get on the train as early as you can is a big help. But always remember, you don't have to stay on the train all the way. You can get off at any point.
That's brilliant, Anthony. Thank you very much. I've actually got a question on the chat here for Stephen. Stephen, what are your thoughts on a US university education as a foundation for Wall Street and for life?
Firstly, I didn't expect to go to university in the US. It just so happened that when I was applying to universities, my parents were living on the East Coast. And so I made, friends during the holidays who are American, and thought, I may as well apply to a couple of US schools, and then got into one. So felt I had to go. And I would say that it was a totally transformative and positive experience. I think when you come from a school like Radley, or at least in my days, back in the late 1990s, the thought of leaving the UK and going to university in the US was pretty atypical. It was extremely atypical, and a lot of people sort of questioned why I did it. But it gave me a totally different lens. It sort of gave me an American lens into the world. It gave me a totally different sort of network, peer group. And a lot of those friends that I made in college were applying to companies that frankly I hadn't even really heard of, Goldman Sachs, JP Morgan, Morgan Stanley. A number of them wanted to go and be investors at hedge funds. A number of them wanted to go and be entrepreneurs. A number of them wanted to be in private equity. So just learning from my peer group, who were extremely aspirational, was very powerful and a very powerful motivator to going to Goldman. I also, I agree with Cass. I benefited from doing the summer internship program and got a job from that. So I would highly recommend it, if for no other reason, whether you go into finance or not. I think having that twin lens of a British school, a top British boarding school, and then doing something in the US, in a college in the US, just gives you a more expanded view of the world, a broader experience, and can be the sort of foundation of sort of really a transformative college experience, and sort of starts into the broader world.
Thank you, Stephen. Will, you have your hand up. Would you like to add something to the first question or this one?
Yeah, just a couple of quick things. Just backing up what Anthony Cassidy was saying about internship programs. One of the things that staggers me, and we get a lot of people approaching us, and we obviously interview people from time to time and try and be helpful, is there's an awful lot of free information, mainly in books, but also in podcasts. Hilton and I were just discussing the Money Maze podcast, which is founded by Will Kemper, which has interviewed some of the sort of leading lights of the financial world globally, where you are getting free advice. I mean, there are some incredible books, whether they be written by the likes of Howard Marks, or this morning I was reading Warren Buffett's annual letter, which is published for free, believe it or not. I mean, he is, I would undisputedly, probably the most successful investor who is currently alive today. And you can go onto Berkshire Hathaway's website and read 35 to 40 years of his annual letters, which are some of the best education, I would argue, that you can get in the world of finance. But read and find something that you really, really enjoy. As Cass said, the financial world is incredibly broad. And what Stephen does and what Nick Wolford does are incredibly different on a day-to-day basis to what I do. And just backing up what Stephen said, we're lucky enough here to work with a few big US asset managers. If you ever got the opportunity to go to a US university, I think that is I'm talking about broadening your horizons. You should take it with both hands.
That's brilliant. Thanks.
That's me done.
That's really great. Thank you. Now coming over to you, Nick. A question for you. Actually, I'm going to ask a different question to what I was originally going to ask. In a typical day or week, what's it like? What sort of things do you do in your typical day or week? And out of interest, what sort of hours are you working? I mean, how hard is it from an intensity point of view? I appreciate COVID changes things slightly because you're probably not having to do a long commute, but just give us an idea of a typical working week for you, please.
Sure. So a typical working week, I work probably about 7:30 in the morning till about 7 o'clock in the evening, I would say, a typical day. That was a lot longer during periods when, for example, we were acquiring or selling businesses. Typically, the work day expands quite alarmingly when you're doing that. But that would be my normal hours. I used to work in a combination of Glasgow and London, and therefore commuted to both of those places. And now I don't, obviously. I'm sitting here in my office at home, have been for a year. What do I do during the day? I run a very small team of people, a relatively senior team of people that sort of business partner into our various different parts of our business. So they and I will be working, generally speaking, on projects that we have kind of homegrown, things that we think we want to do in our business. And we will work on those together as kind of projects that we will then end up presenting to our board. So, for example, a little while ago, not active now because I wouldn't tell you if it was, we thought about what we might want to do in terms of international expansion. Virgin Money UK is a UK-based business only, and therefore we spent some time working out, where would we go to next if we wanted to expand internationally? What would be the most beneficial jurisdiction to enter? How might that give us a whole load of options for the future? And that piece of work was done, presented to our board, and then we kind of move on to the next thing, if you like. So my day tends to be leading a team of people who are doing that work, contributing to it, and then ending up discussing it with our board members. That's the sort of activity that I normally get up to.
Brilliant. Actually, following on from that, we have a question from Catherine. Where do you see, Nick, where do you see companies like Revolut going in the next few years?
Well, the expansion, the growth of a whole set of what I suppose would have been called fintechs, but I think probably now I've outgrown that moniker, has been exceptional. And Revolut, like many others, having started in one particular area of payments, which is where most people end up starting in financial fintech, are going to expand out into different and adjacent markets. They've already obviously started to do that quite aggressively in the UK and elsewhere. And I suspect that what they will do is they will continue to grab adjacent markets as they go, and they will pull those adjacent markets into the customer proposition that they run. Where they and others like them need to be very clear, I think, is what their revenue model is as they build these adjacencies. It's quite easy, as we've seen with other UK-based banks like Monzo, for example. They acquire a lot of customers, but they actually don't have any way of making any money out of those customers yet. So monetizing the customer franchise that you build is actually very, very difficult. And it's why there's such a sort of incumbency problem in UK banking. So they need to work out how they're actually going to build a model that makes money. And that tends to mean lending money rather than just acquiring deposits from customers like you and me. So there's a hell of a lot more growth that's to come, I've no doubt. But the revenue model, I think, needs to be sort of front of mind for all of those guys that are growing very, very quickly. But they'll run out of road if they don't think quite hard about how to make money out of it in the medium term.
Thank you, Nick. A question for Anthony now. What skills and qualities do you think you need to survive in a finance career?
That's a nice question, Hilton. I think everyone should get a chance maybe to try and answer that. Skills and qualities, was it that you're asking? Look, skills. Again, let's just talk something that's a little bit closer to a lot of the boys right now. University degree doesn't really matter. Okay, I see people who've got physics degrees, and this can be masters or undergraduate level. Modern history, French. Yes, there are some finance degrees. Maths degrees. Again, just to emphasize the breadth, because there are so many different roles, Hilton, that people can do. Okay, you could end up on the trading floor. Maybe that's your kind of personality. If you're the kind of person who likes that energy, who likes that buzz, who likes the stress of a trading floor, that might be a certain type of skill that you can use to your own success. Or you might be someone who's likes it a little bit, dialed down a bit, is good with maths, is good with physics, is comfortable wanting to sort of risk manage and build finance models. Okay, and there's a role for you in that as well. Again, there is a very deep training program for graduates in most of the investment banks, and that's a period of training when you arrive at the banks, but then you might then rotate across a couple of desks, and they'll continue the training for you, probably for a 2 or 3 year time period. Skills, it can be long hours. Someone asked Nick about the typical trading day. If you find yourself on a trading floor, okay, you are in at 6:30 in the morning, and you'll be doing well to leave before that same number in the evening. And the trading day, if you're in there on the trading floor, you don't really want to leave. Lunch is very quick and it's back to your desk. You're not wanting to miss anything that you can make money out of, or you can advise your clients about. So no, I think you have to be relatively thick-skinned. I think you have to be energetic, and I think you have to be competitive. It's a very competitive type of job. For instance, one of the banks every year gets rid of 5% of their employees. Okay, and that's just to keep everyone keen and motivated and going. And people will have different opinions about whether that's a good thing or a bad thing. But if you're constantly looking around, my God, am I going to be part of this 5%? It certainly keeps you on your toes. So you know, I would say energy, I would say a desire to learn, because there are always new parts of finance that will suddenly be the hot thing, you know, ESG investing or Bitcoin. You know, I didn't get taught about, no one taught me about Bitcoin when I was a graduate, but you have to have that, you know, desire to want to sort of say, okay, it's time I learned about it, and you know, be able to move and to be flexible like that. Sorry, that was a little bit too much of a long answer. And Stephen wants to come in.
Yes, thank you, Stephen. If you could continue on that.
Yeah, so I agree with everything that was just said. The only thing I would add to it, though, is you know, whilst sort of any, you know, pretty good degree, I think will do, whether it's you could be doing fine art, history, physics, maths, economics, whatever else. I do think you need a degree. I think it's really hard to get into finance without one, and I say that because actually, when I was in Hong Kong, it must have been 7 or 8 years ago, someone from Radley showed up in my offices, got introduced to me, and he said, look, you know, I dropped out of university and this happened and that happened, and I've been traveling and I don't have a degree, but I'm a really good guy, and you know, I think I can make a difference, and you know, would a firm like TPG ever hire me? And the reality is, I think most of the top financial firms are very competitive. They're very hard to get into at the top end, and I think you need a high quality degree. Doesn't matter what the subject is. You just have to have shown that you have real application, aptitude, and a desire to learn. And then the other comment I would make is that the skill sets you need to be successful in finance, I think they change over time. So I quite often see people who are really good analysts and associates who are very fastidious, have great attention to detail, and very sort of process and execution oriented, sometimes struggle when they become more senior and become more responsible for, you know, developing business, managing people, developing relationships. So I'm just saying that the skills that make you kind of successful evolve and change through the course of your career as well. I, for example, was a horrible, for what it's worth, I was a horrible analyst. I had very poor attention to detail, but somehow just squeaked through and was a much better, you know, was much probably better as I became more senior in my career.
Thank you, Stephen. We have a question from Jack Chen. I wonder if just one of our experts can answer this. For investment banking and private equity, what is the difference in working hours?
Well, I'm happy to try and take that. I think that both are very intensive. They're probably similar. If you're working on a transaction in a private equity firm, you could be working 24 hours a day, 7 days a week, pretty relentlessly. I think in investment banking, similarly, if you're working on a transaction, you're at your client's beck and call. You're an advisor. Your client is paying you a huge amount of money to be available, 24 hours a day, 7 days a week. So I think both are very time intensive. I do think within a private equity business, you're a principal. So the transaction, the deal that you're working on is being a little bit more driven by you. Whereas if you're an investment banker, you have a lot of clients that are demanding your time. For what it's worth, with what I do, fundraising is a little bit different. The time intensity, my hours per day are not necessarily long, super long. I probably work from 8 until 8. Sometimes I have calls early in the morning. Sometimes I have calls at late at night. But I travel, at least pre-COVID. I mean, I was traveling around the world 5 days a week.
Thank you, Stephen. Question for Will. Do you think it is best to start your career in a small company or on a graduate scheme in a large company?
Thanks, Hilton. Wow. I think that's almost an impossible question to answer. And maybe where I should start is to encourage people to think about the culture of the firm. And we've heard Nick talking about, the bank strategy, which probably involves a lot of reading, for example, and at another extreme, we've heard Anthony talking about working on a trading floor in an investment bank. Now, I would argue that the culture, whilst the hours may be long in those two jobs, the culture in those two different avenues of employment will be wildly different. My working day is marginally shorter. I work from roughly 8 till 6, but rather like Stephen, if I'm on we're in a full-on capital raising mode and traveling, it's pretty likely that that day will be endless. Now, the culture in a massive investment bank is by implication going to be extremely different to the culture in a firm like Campion Capital, where we've got 12 staff. We're a privately owned firm. Now, the experience for someone coming through the door at Campion Capital, we don't have a structured internship program or a graduate training scheme. That having been said, I would argue that it might be marginally easier to get a job at Campion Capital than it is to get a job on the graduate scheme at Goldman Sachs. Anthony and Stephen will probably know better than me the statistics of how many people apply to the Goldman's graduate scheme and how many people are successful, but it's super, super, super competitive. And what I really encourage people to do, and sorry for to repeat myself, but the avenues are so wide. Try and find something that really, really, really excites you. You want to do something that you enjoy and is going to be fun. Don't necessarily be seduced by the dollar.
Thank you. A question for Nick. How have you created and used a network in your career? We're often told as Radleyans the value of the Radley network. How have you put it to use?
So the value of my Radley network was in fact where I got my first job from. So I started out, as I said, working as a university student. That was because of a friend of mine's father. I've never been bashful about that. That's how I started. But if I hadn't done well from that point, I would never have gone back. So I was employed in that particular role every holiday at university for 2 years. And that's what led to my job starting. So the Radley network certainly helped me get going. The network thereafter is kind of split into two for me. The first part of my career was actually spent on the trading floor, as Will was describing. And with the exception of the two Wills in Oxford, I don't really keep in touch with or have much contact with much of that part of my city career. The network that's actually been much more helpful to me was established after I came back from doing my MBA and moved into working in a strategy role and a corporate finance role rather than a trading one. And there it's absolutely impossible to sort of quantify the value, except to say it's very, very high. The opportunities that you can uncover through the people you meet, the most successful people I know have a little black book in their head of all the people they've met, and they can Rolodex it on what those people do, and therefore they know who to reach out to when they get themselves in a particular situation where they want some expertise. And that is something that I've used a lot in my career, is to ask questions of people that I know have that experience and therefore have been able to help me as I've gone along. But as I said, much more so in the days of strategy work at RBS and at Virgin Money than before. I think the one thing I would say is, as you're thinking about starting out in your career, it sounds like a somewhat unkind thing to say, but everybody is a potential asset to you as you think about starting your career. everybody that you meet, all the friends of your parents, all the people that you might meet during any internship process, they are all an asset that you can make something of. And I don't mean that in a totally mercenary way. It's just don't lose them and recognize that you are in fact interviewing all the time at your age. So, clearly have some fun, but also just recognize there are people out there who will help and can help if you show up in the right way.
Thank you. Will, would you like to add something?
Yeah, I think one of the most important skills is to be inquisitive. And, I think Nick has just hit the nail on the head. Being inquisitive to me in many ways is about asking, ask questions. Do not be shy to ask questions. Make sure you understand, what someone does. And if they explain it in too technical to speak, just say, I don't understand that. Can you please explain it again, but in more simple terms, because it's hugely important to be inquisitive. And I don't think that this necessarily relates to finance. I think it's true of pretty much any career. It makes you a more interested person. And particularly when you're coming to the interviews, it astounds me. I haven't interviewed that many people in my time, but I'm always astounded when it comes to the end of the interview, when it's thrown open to Q&A, quite often how some people just don't have any questions. And what that says to me immediately is they're not interested in the career in which I'm pursuing, and is almost a complete score me out. So just be inquisitive.
Okay, thank you. We had a question from Oliver Mullen for Stephen. If you're hoping to join a private equity firm, would a past in M&A be useful / necessary? And if not, where could one gather relevant and sufficient experience?
I think it depends what you want to do within a private equity firm. So, there's there's really three major roles in a private equity firm. There's investing money, raising money, and creating value with the money that's been invested. So I think if you want to be an investor and sourcing and underwriting and evaluating companies, then very typically, you would have done some time doing M&A or corporate finance work, really having a very, very detailed and forensic understanding of a company's balance sheet, how to underwrite, cash flows, valuation, etc. Have all the sort of technical background and experience that a banking, like an investment banking role, would afford. Typically speaking, as well, most of the sort of junior people that work at TPG have MBAs, generally speaking, from Harvard, Stanford, Wharton, etc. On the fundraising side, which is what I do, I didn't do M&A and corporate finance, but at Goldman, my role was fundraising. So I've basically been doing capital raising all my life, and I think that the capital raising aspect of private equity is probably underlooked. I think it's a really fascinating part of sort of asset management and particularly private equity, because you get to meet investors from all around the world, all different shapes and sizes. Right now, we're working on raising a $5 billion carbon fund that's going to look to invest into companies that are going to help extract carbon from the atmosphere. We're doing that with former Treasury Secretary Hank Paulson, and that's fascinating. And I've never done M&A. And then on the value creation side, I'd say, typically speaking, people who are on the value creation sort of front of what we're doing, figuring out ways to grow revenue and reduce costs, bring in new management teams, often have a consulting background, or have worked in industry or in a company like a Microsoft, Amazon, Google, GE, and have really operational experience. So sorry, that's probably a long-winded answer, but hopefully helpful.
Thank you, Stephen. Anthony, do you have any tips for handling the pressure on the trading floor?
I know, again, make sure your health is good. Stay in, try and be, try and stay healthy, stay fit. And again, remember, the trading floor is just one role within one bank, within one kind of institution. If you're the kind of person who, when you're walking onto a hockey pitch or a football pitch, really feels that buzz of the team, then that's the kind of pressure, and it's a cup final, or it's you're in the last 10 minutes of the game, and you're 1-0 down or something. If that's the kind of pressure that you like and the kind of buzz that you like, then a trading floor is probably a good place for you. I get the impression that it's changed a lot since I was there. As the gender balance of the trading floor has changed. I think it's less of a raucous, rude, noisy place that potentially it used to be. So that would suit certain types of individuals more. I think it's now easier to be on a trading floor than it was certainly 20 years ago, as the kind of person who's on there has changed. There's a much wider breadth of person on your average trading floor right now. But again, it won't suit everybody. Okay, so if you're the kind of person who doesn't like that kind of atmosphere, that team atmosphere, and you sort of shirk away from that, then that's fine. So don't put yourself on there, because you'll be constantly struggling. But if you do like that, I think that's something that you can take as an advantage, and really make yourself more motivated to walk in every day, because you're walking into the trading floor by, there was a question about the trading, your hours that you spend. You are in 6:30, and it's an interesting, there's a beat and flow to the floor, because there's times when it's quiet and there's times when it's really, really busy. And sometimes you think, oh God, I just wish it could average out and it'd be nicely sort of, the same level during the day. But, it gets very busy in the morning around 8 o'clock. Then there's a lull, and then it gets very busy again when the US comes in at about sort of, 1:30, 2:30 time. And then it gets very busy just before the close, where everyone's trying to get their orders in and get their books all sorted out and make sure they've traded the right things, and putting any errors that they've traded, trying to solve all of those problems. So again, if you're more of an energetic person, you're going to take something from that. But if that's not the kind of personality that you are, don't push it. You don't have to be on the trading floor. You can be in many other roles within a bank.
Thank you. A general question to whoever would like to answer it. What is the best way to determine what part of the broad financial world is most suitable for me?
I'll have a quick go at that. Back to books. There's an amazing series called the Little Book series. Just go onto Amazon, and it covers pretty much every single avenue of the financial world. I think people could do a hell of a lot worse than reading those books. They're very short, and they're written by specialists in their particular fields.
I would just add to that I would talk to people. You would be really surprised how open and willing, whether it's the people on this call or just sort of people in your ecosystem, your parents, friends, if you actually go and ask, hey, dad, friend number 2, what you do sounds really interesting. Could I come and have coffee with you for 30 minutes? I would bet that 9 times out of 10, you'll get that coffee and a really interesting insight.
Thank you. That's a good application of the network. And with the final question we'll ask to all of you, what do you love most about your jobs?
Do you want me to go first?
Yeah.
The thing I love most about my job now is its breadth. there is kind of nothing, obviously within the sphere of financial services, that isn't relevant to me now. My early career was very focused in one thing, trading equity derivatives. My career now is, it can be anything. And literally every day is completely and utterly different. So it's the breadth of what I do that I enjoy most now.
Well,
I'll quickly fire through the people. Some of the people that I get to meet, most of the people that I get to meet, whether it be COVID times or not, some of the people who've founded asset management businesses, it's just unbelievably inspiring. And you know, I take that as a total luxury of my job. I find it fascinating meeting people.
I would probably second that. You know, the breadth, the people, is pretty awesome. You know, as I said, right now, you know, working with former U.S. Treasury Secretary Hank Paulson on building a carbon fund. We're also, you know, doing something in the technology space. You know, I do a lot of work. I still do a lot of work in Asia. So just the breadth of finance, and for me, the people as well.
Yeah, Hilton, just to finish that one off, I would agree with everything that the guys have said. You know, don't forget, it is an industry that can also pay you very well. Okay, the rewards are potentially high. The risk, whether that be, you know, health risks or whatever, are also, you know, it can be a pretty difficult job. But you know that if you do well, and if you make whatever targets that you have to make in a certain period of time, you will get paid. Okay, and if you feel as if you're not getting paid or rewarded sufficiently at the place where you are, you can move and do the same thing at another firm. You can be a trader at a bank, and then suddenly you can start your own hedge fund, and that becomes a very different proposition. You then become a little bit more entrepreneurial, and you've got the problems of starting your own firm. So to me, and again, it might sound a little bit mercenary right now, but if you do well, you know, the rewards are there for you.
thank you. And I know we said that would be the final question, but we've had something in the chat from Seymour Shaw. So to any of you, the real final question now: is the UK now less of a serious player in finance following Brexit?
Gosh, who's gonna take that one on the chin? So I think the UK's position is certainly less certain now in terms of financial markets, while everyone battles for what's called equivalence. And I think that may have a sort of long-term detrimental impact on how much business goes through London, particularly as a financial centre. Is that going to be the kind of death knell for UK financial services? No, not by any stretch of the imagination. A lot of money, and in fact, probably the majority of money invested in Europe will still flow some way through London. But I certainly think it has made us temporarily much less competitive, yes. I don't know what the other guys think about that, but that would be my positioning.
Yeah, I agree with that. I guess one of the lenses that I look at it through right now is also just from a regulatory lens. So at least in the world of alternatives, that there are some real regulatory changes that will impact London's competitiveness as a financial center relative to, say, Frankfurt and Paris. The long-term impact of those changes, I don't know. I don't know what they'll be, but I agree. I think it has made London less competitive, and it has made some of the other cities around Europe much more competitive.
I would wholeheartedly agree. We're as a business setting up in the process of setting up an office in Madrid, which tells you something. I think it will be relatively short term, and London is certainly not dead. But one of the other things I wrote down in terms of if you've got languages, the UK is not renowned for producing people that are multilingual, but I think it's going to become increasingly important post-Brexit that you will be more appealing, particularly to a big investment bank, for example, if you've got languages.
That's absolutely brilliant. Thank you, gentlemen. Anthony, did you want to add something?
Sorry, Caroline. So just to add, I think what Will has really hit the nail on the head there for me anyway. And just to add to that, when he's mentioned languages, don't forget, there are the other computer languages that you can be looking at. So again, just to finish off, the people who are on the graduate programs that I see, if they've got a really good Excel knowledge, and I know that Radley have run some Excel classes, and Python is a big thing now. If you can do some coding within Python, you really do become, you're sort of self-sufficient by the time you're even entering the graduate program. So language, but don't just restrict that to the spoken language. Think about different computer languages that you can also put in your sort of bag of tricks that you can offer a bank when it comes to an interview process. Sorry, Caroline.
No, that's absolutely brilliant. Thank you, Anthony, and thank you to all of you. That was absolutely fascinating. Thanks for taking the time out of your days. And thank you to Hilton as well for being such an excellent co-host. You were brilliant. Well done, Hilton. Before you go, I'm just going to tell you about the final 2 talks that we've got lined up for the rest of this week. On Wednesday, we've got OR Theo Brumfield, who is going to talk about what it's like working in the middle of a global pandemic for a charity that invests in economically and socially vulnerable communities. And on Friday, our final talk will focus on the career pathway into property, when OR William Donaldson will tell you about the breadth of interesting roles in the UK and international property market. Don't forget to watch any of the talks that you may have missed on Radley Video. Thank you for attending. We hope to see you on Wednesday, and thank you to all of our panelists and to you, Hilton. Thank you very much. Bye-bye.